Hello, fellow traders. Thanks for joining us today. We're going to focus on the practical tips for traders. We'll focus on how to confidently approach trading with big news like earnings reports and announcements when they hit the market. By the end, you'll have simple strategies that you can use right away. Trading can seem overwhelming, but with the right tools, you'll feel prepared instead of panicking. Give this a like and subscribe. Let's get into it. Why is market news so important? Market news often causes prices to move suddenly. Earnings and announcements are great opportunities for profit. The more you know, the better you're prepared. News is like fuel for the stock market. It makes prices move. For example, when companies report profits, earnings, their stock often jumps up or down. Knowing what's coming helps you be prepared ahead of time. So let's talk about what the types of events that you should watch for. Big events that moves the markets. Event type, what it is effect. Fed announcements, central bank updates on rates, stocks go up and down quickly. Earnings reports, companies sharing results, big price jumps in individual stocks. Geopolitical news and events, global conflicts, or changes in commodity prices rise or fall. With Fed announcements, this is when the central bank talks about raising or lowering interest rates, and it can impact the market, which especially for tech or financial stocks. With earnings reports, companies like Apple or Nvidia share how much money they made. Stocks often move a lot after this news. Geopolitical news, like big events with oil supply issues, can affect energy prices. This means energy stocks could go up. Keep an eye on the economic calendar to know when these types of events happen. How to trade Fed announcements. Watch for phrases like raising rates or cutting rates. Be cautious. Price can swing fast. Look at the VIX, volatility index, to see if markets are nervous. Watch the language. If the Fed says cutting rates, look for stocks that often rise. If the Fed says raising rates, it's bad for growth stocks like tech. Avoid making big bets during these times. Market moves can be unpredictable. Use the VIX index to check market stress levels. A high VIX often means bigger price swings. Easy earning strategies. Before earnings, watch for big price swings leading up to the report. After earnings, look for trends once the news is out, and stick to well-known companies to start. Before earnings, stocks often move a lot before results come out because of the traders guessing if it's going to be good or bad. Once the company reports the results, the company usually makes a big move. For example, Nvidia stock moved 8% after good news. So start with well-known companies like Apple or Microsoft. They're easier to follow. Handling global news. Look for easy trends in energy or defense stocks. Use ETFs, exchange-traded funds, to keep things simple. Avoid risky trades until you understand how the market reacts. Global events like conflicts or supply chain issues can affect certain industries. For example, oil news can boost energy stocks. Instead of picking individual stocks, use ETFs. They're like a basket of stocks in one trade, making it less risky. And don't rush into trades during unpredictable times. Focus on learning how the market reacts. Tools to help you. Economic calendar tracks major events like Fed announcements or earnings. VIX, volatility index, shows when markets are more likely to make big moves. Sample indicators uses the MFI, money flow index, to spot trends. The economic calendar is your go-to tool for planning trades around major events. The VIX is like the market's fear meter. If it's high, markets are likely to swing more. And simple indicators, like the MFI, helps you see when the money's flowing in or out of a stock. Pair it with moving averages for cleaner signals. A case study, an easy trade setup. Stock, Apple, ticker symbol AAPL. Earnings report for the event. Action. Before earnings, buy a small amount of the stock or short-dated option. After the earnings, if the stock rises, sell for a profit. If it drops, hold until it recovers. With the option, and with it being short-dated, you will be able to be in a position to hold through the turbulence if you select the right strike. Before earnings, Apple's a good starting point because it's stable and familiar. Buy a small amount of the stock or short-dated options before the report. After earnings, if the report comes in good and the stock jumps, sell for a quick win. If it drops, don't panic. Hold and wait for it to recover. Just stick to easy setups with well-known stocks as you learn. Quick tips for traders. Start small. Only invest in what you can afford to lose. Keep a journal of your trades. And always use stop losses to protect your money. Start small. Don't feel pressured to trade big. Start with small amounts and focus on learning. Keep a journal. Write down what you made in each trade and learn how it turned out. This helps you learn faster. Stop loss orders. This is like setting a safety net for your trades. If the price drops too much, the stop loss will sell automatically, limiting your losses. And on a personal note, I also keep a trading journal. I use Excel, and this allows me to look back on trades and see how I trade and then be able to change my trading style based on the results. I think that you'll have the same kind of results by keeping a journal. Final steps to get started. Step 1. Start simple. Check the calendar for a company reporting earnings soon. Step 2. Pick one stock you're familiar with, like Apple or Microsoft. Step 3. Practice in a demo account. This allows you to build confidence without risking real money. And remember, trading is a skill that you can build. Take it one step at a time and don't rush. Thanks again for watching.